Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about my 0-day to expiration option strategy. I've been doing the wheel strategy on the S&P 500. I've been doing it for about 3 weeks now, and this is the options that I put in for the last week from 1021 to 1025. On this channel, some of you may know that I borrow money to invest in income investments. However, I divested into other strategies where I'm doing the option investing myself. So I've been doing 0-day to expiration wheel option strategy, but then I also have been selling covered calls on my Tesla position, as well as some of my yield max funds. So I will talk about a couple of those things in this video. But the first thing is, let's go to the Robinhood account. Total account value, $203,277.69. I've been investing in this for the last 8 years, and I have been running the wheel on the SPY. To illustrate the wheel strategy, it's easier to show it in the spreadsheet than to actually physically go through the Robinhood app and show the strike prices and things like that. So what I'm going to do is I'm going to be bouncing between the spreadsheet as well as the actual S&P 500 chart, and I'm going to talk about my entries and different things of that sort. So on Monday of this last week, we're selling cash secured puts on the S&P 500. I was looking to make about $53 worth of premium. So let's look at what I was seeing here. So what I was seeing the last couple of days is we were having some uptrending last couple of days, and I thought that this trend was going to continue. However, what ended up happening is I sold the strike price that I sold was the 583 strike to acquire $53 worth of premium. So normally what I do is I don't like to invest right when the market opens. I like to invest closer to 9:15 Midwest time. And so what I did is around 10:15, it'll reflect it at 10:15 on this graph. But what I did is at about 10:15 Eastern time, put the trade in, did not go my way. And then what I ended up doing is I bought back this $53 option for $53. So, I made 53 in premium, and I bought it back for $53, and I'm actually negative 6 cents on it because that's the regulatory fees from putting in the option orders. And eventually I rolled this 583 down to the 581. So as you can see here, this is the 583. This is where I initially put it. I saw the market going down. I'm like, you know what? I think we might hit a little bit of resistance, not resistance, but a support line over here, kind of in this area. But it meant the total market just decided to keep going down. So then I bought that back, and then I sold the 581, excuse me. Sold the 581. So the 581 was over here, and eventually the market closed above it. So I took in the $9 worth of premium, and then I bought it, or I didn't buy it back, regulatory fees of 3 cents. So first day of trading was about $9, which is, again, not a lot of money, but you don't necessarily make most of the gain selling the cash secured puts. The money is made selling the covered calls. So, the thing about doing the wheel strategy is, people get so focused on the actual amount of premium, whereas the actual strategy is to buy in at a really good price or sell at a really good price. And then the premium that you're getting paid is just an added bonus. You shouldn't be having your entire strategy off milking as much premium as possible. However, some people have done a really good job and they're really successful doing so. But however, my viewpoint is you shouldn't be putting trying to put in the most aggressive premium orders in. What you should be doing is looking at the market, seeing how it's responding, and buying in at a good price. Because, for example, if you put a cash secured put, if you put the cash secured put trying to make the most money, and then share price stays there. So to come back worth of $4 worth of covered call premium, that's a lot. So it's better to buy in at a better price, and then hopefully at that point the market will trend up. All right, $9 in the bag. Moving on to 1022, we capped in about $21 the premium, bought it back for $2 because it went in our direction, and we did not get any capital gains because we're still selling cash secured puts. So we were selling the 579. Okay, so 1022, market opens 1015. We're selling the 579. So this is where I put the order in because of how yesterday was. the S&P 500 trended down. I decided that, hey, you know what? S&P 500 trended down. We had a little bit of recovery midday, closed at a high, and then it started at a pretty decent drop. So I was assuming that the market was going to keep going down. So I was much more conservative in picking this 579 strike. However, the market did turn around. So then I moved forward and paid the $2 to buy it back for a total gain of about $19 on that one. Moving on to 1023. So we capped in about $35, did not buy it back. So 1023, and we sold the 578 strike. And I was almost assigned on this one. The S&P 500 closed 577.99. I sold the 578. I don't know why I wasn't assigned that. But it is what it is. So that was on the 23rd. So 1023. So we're looking at this one here. Again, about 9:15 Midwest, 10:15 Eastern time. I'm buying in. Market looks like it's going to trend down. So I went for like a more conservative premium. Sold it here. So, I mean, it punched through all the way down, thinking I'm going to have to buy in at 574. The market recovered a bit, and then it closed right 577.99, 524. All right, $15. We did the 574. Okay, yeah. So I guess on the 24th, I went ultra conservative, especially with how low it dropped down over here. So I sold the 574. Looks like, it was going to consolidate in this area. Made the quick $14. And then finally on the 25th, we made our $19 of premium, which gives us a grand total of $96. But let's just talk about this last portion here. So we chose the 580 strike. However, we will be getting assigned this because it did go below it. So the 580 is right here. Market looked like it was going up. And, the goal of me, putting in the trades at 9:15 is to kind of see what that initial volatility is doing, see what the market's doing. And usually for the most part, I've noticed it just keeps the same trend. So if it goes down, it still closes down. If it goes up, it closes up. If it goes down, it's pretty much going to stay down. Like whatever the market does in the beginning portion of the day, it usually does the same thing for the rest of the day. However, I'm not a trading expert, but this is just an observation that I've noticed. So according to this, it looks like, pre-market, whatever, market went up. At this point, my thought is like the market's going to keep going up. But then ultimately, there was a reversal because we are hitting all-time highs here. So let's go to the 5-year. Like we are absolutely hitting all-time highs. So, there has to be some sort of retraction back here. So I'm expecting it. It's in my thoughts. But yeah, 580, and this is where we close. So I am getting assigned that. So I did get assigned 100 shares of SPY, but because we were selling calls, the actual average price isn't 580, it's 579.81. So you know what? I would call $96 a pretty decent week of doing 0-day expiration investing. Had I been assigned probably during the week, this could have been definitely much more. But again, I don't want to be too aggressive with the strike premiums here. I want to be more conservative because I'd rather get the shares at a price that I want, and then I would sell the covered call and being more aggressive with the covered calls and getting more premium and income like that. But let's go to our little thing over here. So since we had no capital gains in any of these option premiums, we did have that capital gain last week, which was like $98, which definitely brought the numbers up. But for the most part, this is like the 0-day option, 0-day to expiration option plan. I did get assigned the 100 shares of Tesla. So usually my margin maintenance is $42,900. I've been getting out of some positions out of like other holdings and making my account look a little bit nicer. But with the option being assigned, I got assigned $58,000 here. So if you just do the $42,900 plus the $58,000, it brings my margin used up to $99,000. And then, the plan is for Monday. So we have the 580. So we chose the 580 strike. So ideally what I would want to do is when I sell the next strike on the 28th, this is where we bought it for, but I don't necessarily want to just get $123 in premium, because if I bought it for this, I'm only gonna get 123 bucks. However, if I pick the strike right above it, that's $100 extra just from buying at 580 versus $100 extra plus $83 in premium. That's $183 of profit versus only $123 because we bought it pretty much at this price. And to even build on that point even further, so even if you just go up one more, I think a 23 delta is pretty good. So then now we're talking about $253 because if we bought it at 580, we have $2 per share times 100 is 200 bucks plus 53. That would be $253 option play. And you know, it would be nice to make the $250 every single week on week. But however, that's not how it works. Like, investing is made to test you, and nothing goes as you plan to. However, this looks like the option that I'd be picking for the following week. So come Monday, depending what the market's going to do, I'm probably going to try selling the 582. And then we're going to go for there. But besides that, I hope you all have a good one. Hopefully this kind of helps you open up your eyes into some 0-day to expiration option investing. And then I'll probably be making my cover call video for the Tesla stuff here, but that'll be a different video. All right. Y'all have a good one. Take care. Peace.